If you have a high income, and I'm talking a million plus, you need this information. You need to drop your tax liability. Your high salary is costing you a large portion of your income as taxes. This process will work in almost every country in the world. The names might be different, but the concept is the same. This is a follow-up to the book, Windfall Wisdom. I kept getting people reaching out to me wanting more, wanting what I couldn't put in the book. So here's the disclosure. Check with your tax professional. This is not tax advice. And to those people who left great reviews on the site where they bought it, thanks. Your positive comments help get the word out about how the wealthy should handle their money. For those people who earn a lot of money, their biggest single expense is taxes. If you can reduce your tax liability, you'll have more net worth. There are illegal ways to cheat on your taxes, and we won't be covering those. Oops, I probably just lost a bunch of viewers. We'll talk about legal ways to reduce your tax liability to near zero, actual zero, and even below 0%. Yes, the government paying you instead of you paying them. Look, I'm not going to waste your time with max out your 401k and other pre-tax retirement accounts like an IRA. I'm not going to mention an HSA. If you don't know about these things, you can easily find them on the internet. What you'll learn here is what only a small percentage of people know, mostly tax professionals. So if you're making your money from a corporate job, sports, entertainment, music, it doesn't matter. You're taxed on that high income. You need to reduce those taxes. Step 1. Don't buy a car. Don't buy your mama a house. Don't buy the jewelry. You'll get the luxuries, just not right now. You need to save up a huge percent of your income. With all that savings, you're going to start a business in which you or your spouse, filing jointly, are actively spending time managing this income stream. Your new business will be set up as a pass-through entity in which the equity, that's your investment, is at risk and any loss or deduction can be taken off your personal taxes. The business you create needs to be an asset that will appreciate, like rental real estate, a restaurant, hair salon, auto repair, car wash, vacation rentals, etc. The key components, the business will cost a lot of money to start, continue to cost money to maintain. You or your spouse filing jointly will be spending time working the business to make a profit, and it'll increase in value. The money you've saved up and put into the business will be an equity contribution. You have two choices here. If you invest in rental real estate and you or your spouse spends time managing your investment, you'll be able to write off the interest you pay on the loan. On the other hand, if you buy a business like a hair salon or you don't spend time actively managing your rental real estate, you won't be able to write off the interest on the loan, but you'll be able to depreciate the asset and build the business using your personal income. If you want to truly get down to zero income tax, you'll need to invest in rental real estate. Picture this. You save up your signing bonus and a huge portion of your income. You and your spouse use the money along with a loan to buy an apartment building. You make improvements to the building, especially the unit the two of you will be living in. Now you have on-site management. Things you buy for the business operation are tax deductible. You need your unit to be perfect because you're going to use it as a model for prospective tenants. The furniture is now deductible. The weekly maid service too. Or use your unit as an office and the unit across the hall as the model. Of course, you can let prospective residents stay in the model for the weekend. Connect your daily life to the operation of your rental and take more tax deductions. You and your spouse need a cell phones to talk about the business. You need a personal assistant to get bids for projects. You need a truck to pick up materials. Your spouse needs a Land Rover Discovery HSE to deal with the daily needs of the building. There are a couple things you need to keep in mind to get the full tax benefits of rental real estate. The debt you take out to buy the asset, fund improvements, or buy equipment will be personally guaranteed by you. Now, all the interest you have to pay on that loan can be written off as a deduction on your personal income. Using leverage, that's taking out a loan, is a key component to this tax saving strategy. Let's say you're able to save $1 million within the first year. Use that money, along with a loan, to buy a business or a small apartment building. Your $1 million, along with a $3 million loan, will buy you a $4 million property that generates passive income each month. The following year, let your income pay down the interest on your debt. Let the profit from the asset pay down the principal on the debt. All of your income, both personal and your business, is going toward the business expense of paying off the debt, and it won't be taxed. When the business has expenses for maintenance or improvements, use your personal income as an equity contribution. The expense is now a tax write-off on your personal income. Can you see how quickly this asset will be paid for in full? Once it's paid for, use your high income and the income from the first asset and save it. Save it all. Once you have a pile of money, buy another larger asset with your cash and a loan. If you're lucky enough to continue to have a high income, continue to pay off the interest on the loan with your salary. Use the income from the first asset to pay off the principal. Also, use the income from the asset you just bought to pay off the principal. You have all this income going towards this expense, so it's a deduction off your taxes. You now have two assets, one paid for in full and another being paid down rapidly. As long as you have a high personal income, continue this cycle. Use your personal income to pay for your business expense. The magic is coming. You getting your money and the lifestyle you want isn't far away. But before I can tell you about the secret sauce, you need to further reduce your taxes. As long as your career is paying you a high income, repeat the process. Save up money from your salary and the profit the businesses are producing to buy another asset. If you choose not to buy rental real estate, or you don't have the time to manage the property, you can buy or start a business. Sure, the interest you're paying back won't be tax deductible, but many of the other expenses will be. And like rental real estate, you can depreciate the property and equipment. Picture this. You buy a barber shop, a restaurant, a coffee shop, or a company that manufactures a product. The equipment, the payroll, the improvements are all tax deductible. Like rental real estate, you're trying to combine your personal life with your business life to let the business pay for the things you need to buy. For this pass-through business, there are limits to how much it can offset your personal income. As a married couple making $500,000 a year, it can work well. But if your income is a lot more than that, you would have been better off with rental real estate idea. The idea is to let the business pay for its expenses and build the business's value. When your business has value and no debt is when the magic happens, when you get your payday. But before you get to take tax-free money out of your business, let's further reduce your taxes. Use accelerated depreciation to reduce your tax liability. This is done through cost segregation. Cost segregation is breaking out the non-structural items and depreciate those things more rapidly. Appliances, roofing, HVAC, parking lots, and other things can be depreciated faster than the structure. Accelerated depreciation will take a big chunk out of your taxable income. If you're buying a $4 million apartment building, you could depreciate $2 million each year. We've just reduced your personal income by $2 million. Can you see the tax savings? If you're not making that much, your depreciation can be carried forward into future years and the tax break can be taken then. For any further personal income tax you owe, use expenses paid toward your asset to reduce your tax liability. Each expense must have a purpose, ordinary and necessary to earn income, must have proof of payment, and be properly reported, with no miscellaneous deductions. For example, vehicles over a certain weight can be written off as a business expense. The business will be buying a large vehicle. You, as the owner of the business, will be putting your personal income towards the purchase price. Your taxable income has just dropped by the purchase price of the truck. Offer to pay your employees' college education costs, up to the maximum the government will give you credit for. Their education keeps them working for you, helps their training, and gives you a tax break. If you entertain or to get clients, you can write off part of the expense. If you have an executive board meeting in the Swiss Alps, you can write off the expense. If you use your cell phone to deal with issues for your business, you can write off the expense. The more you connect your lifestyle to your business, the more you can take as deductions. What you were waiting for was when your business or asset had value and little debt. This is when the magic happens. This is when you get to cash out tax-free. When you own the asset outright or have very little debt, take out a loan against the asset. The loan is tax-free. This is now your money to enjoy how you want. Buy the luxuries you've wanted. Let's say your $2 million a year career lasted 8 years. Each of those years, you've paid nothing in taxes, and you've accumulated properties each worth more than the last. On the low end, with appreciation, your assets are worth $20 million. That's $4 million more than you earned during your career. And you own it all outright. Your career might have ended, but you have something to show for it. You take out a loan against those properties of $10 million. Can you and your family live on $10 million? Can you spend your tax-free $10 million on a house, cars, and trips? Could you invest your $10 million in an index fund and withdraw 4% a year for the rest of your life? On top of that $10 million, you can take out another loan in 10 years. Your asset has appreciated, and the income it's earned has paid down the loan. Your tenants were paying back the loan and further reducing your taxable profit. Use the income from the business to pay back the loan. Once the loan is repaid, repeat. Take out another tax-free loan, even more this time if you want. At the point you took out your first loan, you probably had a few different properties or businesses set up. Because each one had its own worth, you could have staggered the time you took out a loan on each. To further reduce your taxes or even have the government pay you, look for government-subsidized programs. Think solar or wind energy, housing in poor areas. If you need to pull income out of your business, do it as a partial salary with stock given to you and dividends. Hey, to recap, reduce your expenses. Live as cheap as possible. Save the majority of your high income with a plan in place to start or buy a business with your cash saved as well as a large loan. Use your high income to pay back the interest on the loan and continue to put money into the asset as maintenance and improvements. Once the first investment is paid off, start to save money again. Keep living on the cheap, putting your high income into savings with a plan to buy another asset with another loan. Once you buy your second business, use your high income to pay back the interest again and the income you're generating from the business to pay back the principal. When you have maintenance or improvements, use your personal income to make an equity contribution to the business and write the expense off your personal income taxes. When you have the businesses paid for, you can take out a loan, tax-free, against the business and live on that money. If you continue to have a high income from your job, continue the same plan of buying assets using your personal equity along with a loan.